Welcome to another episode of the Weekly Crypto Check-In, recorded on August the 7th, 2024. I'm your host, Robert Swarthout, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Hey, Robert. It's going okay. Kids are back in school. It's been a very volatile week so far in the markets, to say the least.
All markets, for that matter.
Yeah, all markets starting Sunday. But no, things are good. We got some interesting headlines to cover over the last week.
Yeah, it's traffic is just as volatile as the markets have been this week. So here we go. So our first topic is something kind of cool. I wouldn't necessarily thought we'd be at this point to already be doing this, but it's cool. So USDC, the stablecoin that is sponsored by Circle, is now doing on-chain insurance and basically showing their insurance for the stablecoin, and it's underwritten by Lloyd's of London. So big name with the insurance side, and the transparency is really cool to see. You don't have to take a promise anymore. You actually can see what the underlying insurance looks like, which is a lot of progress there.
Yeah. Any idea how long this has been kind of in the works?
No, I didn't see anything. I think my guess is a while. I mean, yeah. I'd imagine that is a slow process, but once it's on there, they can keep it updated, and obviously Circle or USDC in particular is ever evolving and growing in all their markets. So I don't specifically know if the insurance covers all the product or just part of it, but it's progress nonetheless.
Add to the ever unique list of things that Lloyd's of London has been known to insure. Yes. Yeah. I mean, there's some pretty fascinating stories out there. So very cool that they stepped in here, and one of the big well-known names, like you said, in the insurance space to step in early.
Do you have any idea if Lloyd's actually writes traditional policies as if you would understand insurance company, or is it always this esoteric stuff?
I don't know. I don't know enough about him. So yeah. I've always known him as more of the esoteric participant in the market, or looking to write insurance against more esoteric assets.
Interesting. Yeah. Cool. So our second topic is a topic that we've talked a couple times about, but this is a lab. Open Eden Labs is the company that is bringing tokenized U.S. Treasury bills to the XRP ledger. So this is now going to be the fourth network that Open Eden has the T-bills on. It's not yet launched on the XRP ledger. It sounds like sometime in Q3, early Q4. And Ripple, which obviously has a huge involvement in the XRP ledger, is going to be allocating 10 million of their own funds to this T-bill offering. So people might ask, why are they adding more networks? Well, to me, once some assets that don't need to be network specific can be across multiple networks, it just increases liquidity. At the end of the day, it's good for that particular asset, as well as I think it is also good for the respective networks that get this kind of asset on, because it gives you something else besides a stable coin or Bitcoin or Ethereum that you can trade against. Now you could have a T-bill XRP market if you really wanted one. You will in this case when it's on the XRP ledger, but you could have something even more strange like T-bills to Lloyd's of London cafeteria stock. Who knows? Something crazy. So,
Well, I think it's just another data point, obviously a meaningful one in terms of the maturation of the digital asset or crypto space. I mean, we're seeing like this week play out, starting on Sunday, the importance of liquidity and market participation. There's a lot of investors who have gotten into crypto here in the last year with the launch of the ETFs, and there's a lot of crypto investors that have been investing in the space and have been through these volatile periods, many times, many cycles. But one thing I think everybody agrees is that, bigger numbers of market participants in terms of liquidity and capital and more assets moving, if you will, on chain is a good thing. So,
absolutely. And from a trading perspective, there's transparency where you don't necessarily get that in a traditional type environment. So,
right.
Yeah, just another data point, and probably many more to come. So talk about trading. So our third point here, the Grayscale ETF outflows are nearing zero. So this data point that I have is actually as of last Friday. So it's 2 or 3 days behind at this point, but a lot of outflows on the 23rd when they launched. And it's kind of just, I wouldn't say up and to the right, but kind of, with probably a 30-degree angle out of that bottom and nearing zero. So much quicker than Bitcoin kind of got through its cycle, albeit those are very different AUM numbers that they had to process through on the Bitcoin side versus Ethereum. But should show some health for the pricing of Ethereum if you kind of exclude all the other shenanigans that appear to happen with the Bitcoin and Ethereum futures markets in the mornings getting slammed. So then all the ETF buyers can come in and buy stuff on the cheap. I somewhat jokingly say that, but there appears to be a pretty distinct pattern there at this point.
Interesting.
Yeah.
Well, the next is something that's been discussed for some time. The big wirehouses, Morgan Stanley has approved their army of advisors to now recommend BTC ETFs to the clients. Yeah.
2 specific ETFs. They are not doing all of them. And I have the list here. It's the BlackRock ETF and the Fidelity FBTC, I believe. Yeah. I don't know why they chose 2, not all of them. I'm sure they've got their reasons. But at the end of the day, Morgan Stanley is the biggest player in wirehouse. I kind of found somebody that shared the numbers, and it's pretty incredible. So wirehouse's total, at least according to Eric from Bloomberg, as of August the 2nd, so 5 days ago, was 18.29 trillion. Morgan Stanley accounts for 5.69 of that. So just about a third. JP Morgan would be the second one at 5.3, and then Bank of America at 4. And then it quickly falls off after that. But it's a, not going to say that this is immediately going to affect the price, but this is a price positive type, at least long-term news item here.
Yeah. Yeah. I mean, I think there's reports out this week that Wells Fargo, is one of the big wirehouses remaining. I think they manage, at least $1.5 trillion, maybe close to 2 trillion. So they're not as large, but nevertheless, significant numbers of advisors who are, advising individuals and all the way up to institutions, families, etc. So be really curious to see. I've gone back over the last few days and been looking at some of the research that's come out of FINRA and the CFA Society, and it's interesting. I mean, obviously, when you look at the age and the demographics of who's investing in crypto, digital assets, and what their preference is, my sense is a lot of the clients at these big wirehouses are, they're typically older clients, not always, but typically they're older clients. They have, assets, maybe they've rolled over a 401k into an IRA. And then you think about that young population that own, 50, 60% of them own crypto. That would be your Gen Z. It's interesting to see if those folks will move to these bigger platforms or if they're going to stay as do-it-yourselfers. But clearly, having at least the products on offer, you would think is a competitive advantage for the advisors there, whether they use it or not.
Yeah. So a few more details on the Morgan Stanley piece, which I find fascinating how these different, whether it's a wirehouse or just firms that are deciding when their advisors can have access to Bitcoin ETFs. So for Morgan Stanley, they're allowing the allocations to be limited to a max of 3% of their portfolio value. It's not allowed in IRAs. Accounts must be marked as aggressive risk, and your net worth needs to be greater than 1.5 million. it just seems like some of that, like why it just seems like there's a lot of
That's going to limit.
right.
That's going
Absolutely.
to limit greatly who is accessing these ETFs. My sense is a lot of clients are going to be doing it themselves. If
Right.
unless they just completely fully are entrusting all of their wealth management, financial decisions to the advisor, which some families do, some individuals do. But yeah, I mean, I was having this conversation this morning with somebody who does a lot of marketing for wealth managers, and he was saying it's amazing how many advisors won't really talk to an individual unless they have $500,000 or $1 million of investable assets. And
Right.
I'm as an advisor, I'm thinking, great, like I hope they continue to do that, because there's a whole bunch of people that have less than $500,000,
Right.
the majority of people, and
Absolutely.
they need help, and they want help, and they want to own digital assets. So
Yeah.
I got to think that number comes down. But yeah, it's a head scratcher sometimes when you read these big headlines and then you dig in.
I mean, to me, the biggest head scratcher of all the ones I listed there was not allowed in IRAs. Like for an asset that is at the very beginning of a mega cycle, in my opinion, like an IRA may be a perfect place to be making this kind of investment.
Yeah, to compound wealth.
Absolutely. And they're like, no, thanks, you're not allowed to do that. So I don't know if that's across the board or you need to get an exemption or what the deal is there, but that's what I've read so far. So you mentioned earlier on when we first started that, there's new investors in the crypto space because of the ETFs.
Yeah.
The question I have that kind of just I was sitting here thinking about is, so they've invested in an ETF that is functionally Bitcoin or Ethereum in this case, but does that, in your mind, does that still classify them as a crypto investor, or are they just a public markets investor that happens to owns crypto? Because to me, there's a difference there, but maybe I'm drawing too fine of a line there.
Yeah, they see themselves as owning crypto.
Right.
I mean, the crypto native community maybe sees them as basically just investing in ETFs, and certainly not on the leading edge. But I think that the client believes that they own,
and they do
crypto.
Just to be clear,
And they do.
There's no shenanigans.
They're just doing it through an ETF or through an index.
Right.
I guess it'd be like saying, I want to go buy, pick your, tech company, NVIDIA, versus, going and buying it directly. You go and buy it through a mutual fund, which is, for some of these mutual funds, 20% or whatever of their portfolio is in NVIDIA. So it's sort of like indirectly. But yeah, like we've talked about before, one thing that I continue to find really interesting is this whole, I was doing some research, and I know we've got a data point in here about the broader market sell-off, so I don't want to conflate the two, but like when you think about the client at a Morgan Stanley or one of these big platforms whose advisor is now able to do 1% to 3% in Bitcoin, it's almost like saying, like we've talked about, I recommend that you own, let's just pick a company, right? And I just am fascinated about this notion of the conversation between the advisor and the client around, because you're trying to think about it in the context of a stock or some other investment. Like there's a market value for it. Why is the value for the real estate asset or the stock, the earnings, the cash flow, the multiples? I mean, all the things that you think about in the traditional sense of valuing assets, cap rates in the sense of real estate, like with Bitcoin and Ethereum, I find that to be still like quite difficult to sort of even wrap my head around. And I'm curious, like what the advisors like talking points are, because it's always up and to the right. Like the price is going to go up. And with this recent volatility, I wonder how many people, have gone in and decided to buy, right? Or have said, ooh, I don't know, wasn't it at 60,000 earlier?
Yeah.
So I mean, it's almost like if you liked it, right? If you're like the type of an investor who sees themselves as sort of savvy, want to buy on the dips, or I want to buy, when the correction happens. Like if you sort of liked it, at 60 a week ago or whatever, you'd love it at 55, or whatever it's trading at today.
Yeah. It's 55. It was, it's been all over the place, and we can get to that in a second. Yeah. It's, I think what the advisors are saying kind of dictates where they're at, who they work for effectively. If it's a Morgan Stanley, they're probably given their talking points. If they're an independent advisor, they also obviously have to come up with that. So it's a bit of a mixed bag. And, I hope that I'm almost certain there's probably politics involved, and hopefully that doesn't conflate things too much. And, the person that needs to be cared after, again, in a fiduciary duty type situation, actually gets taken care of. So,
well, here's the other thing. So I'm preparing for the CFP as part of my, move into wealth management. And one of the first things you read about when starting the CFP process is, a CFP, which, to be clear, I am not. I'm studying to take the examination 26, I think. But it's effectively, know your circle of competence. And if you don't know your circle of competence, either, number one, you shouldn't obviously lie to the client.
Right.
You should tell them you don't know. So in this case, talking digital assets, that, it begs the question, do you have that knowledge base if you're that CFP sitting there at one of these firms to be able to talk about it? Or are they bringing like that product expert on the phone, or maybe there's just a paper trail they can put in front of the client? I don't know. It raises a lot of these questions around, because, the CFP curriculum does talk about, going to an outside expert or going to a partner within the planning team to, talk about areas where the planner doesn't have expertise. And certainly, we've said like Ethereum, that conversation, for example, could be quite confusing for,
absolutely,
even somebody in the industry, much less an advisor or a client trying to sort of break down. But I think a little experiment I may try before next week is, signing up for some of the content that some of these bigger platforms like BlackRock and Fidelity. I've got to think that they're putting out a ton of educational material and content as these products are now approved. So I might have to go and and do some research to try to learn more about how they are positioning this story and this narrative. Because at least one sponsor that I get material from said this is just like, right after COVID. There hasn't been a better buying opportunity in 4 years. So
yeah. So talk about buying opportunities. So broader market sell-offs. Everybody was freaking out on Sunday.
Yeah,
a lot of people, I guess I should say.
Yeah,
not everybody.
They called it what, Illiquid Sunday on Twitter. I saw that that trending.
Yeah. So, obviously that was, much bigger piece than just crypto, but crypto certainly followed along in its own fashion, and magnified. So it's been all over the place the last 4 days, but a bit of a rebound the last day or two. But it's it's crazy world in general. But then you start mixing in, what other countries are doing to react to whatever situation they find themselves in, and then react to the situation that they put themselves in. It's pretty crazy to watch unfold.
Yeah, no, for sure. I jotted down some interesting numbers on this particular point. The the Japanese stock market crashed 12% on Monday, one of the biggest single day sell-offs in history. A lot of people compared it to 87, our Black Monday here. And then just in terms of Bitcoin itself, I thought this was interesting that between 4 p.m. on Friday, this is Eastern time in the US, between 4 p.m. Friday and 7 a.m. Monday Eastern time, before obviously the stock market's open, Bitcoin was down 20%. Went from 63,000 to 51,000. It's now, I think we've talked about during the show, it's around 55, was at 56 at one point this week. But Ethereum was worse in terms of how it fared. It went from 3,300 ish to around 2,200 during that same time frame.
Mhm.
And so from a comparison standpoint, back when COVID, there was that COVID Friday, March 12th, 2020, I think was the date.
Mhm.
Bitcoin fell 37%
Mhm.
immediately after the world sort of woke up and realized, oh
Right.
crap,
Yeah.
this is serious.
Yeah.
Do you know what it was at that time?
What Bitcoin was
March.
that?
Yeah. You remember, you know
Um,
what the price off the top of your head?
I'm gonna guess 25,000.
It was about 8,000. So 79.11
Yeah.
at the time,
Oh, that's right. Yes.
when COVID, that Friday, March 12th, it traded down to 49.71, I
Mhm.
guess. And you know what it was a year later?
No.
57,000.
Yeah.
So, um, I guess that's one narrative. I'm using a lot of stuff that like I said, I received a lot of this data from one of the big asset managers.
Mhm.
Which we're not endorsing investments on the show, or we're not
Sure.
endorsing any one asset manager, but I like that narrative that in this case Bitwise put together, because it does give you a perspective of how volatile this entire asset class really is.
Yeah.
And you can look back through the history, whether it's of a single token or maybe just zooming way out like the broader market. And I
Mhm.
know you've spent a lot of time in this area, just looking at these cycles.
Yeah. You
And
I have to admit, like, when I saw the broader market going crazy on, Sunday, I was like, I didn't even bother looking at crypto. I was like, I just knew it was gonna be down, and I was like, we're just gonna have to hold our breath here for a few days, and we'll be okay, and then we'll recover. In my opinion, we're still in a bull market cycle, although this one is just incredibly bumpy in the middle, more bumpy than
Mhm.
I've ever experienced personally. But it's a
Well,
it's fascinating to watch.
it's certainly a test of conviction, right?
Yeah.
Like we've talked about this, even with Teton clients. Is
Mhm.
it's a long term uh it's a long term, I hate to even use the word bet. It's a long term. You've got to have a long term orientation,
Yeah.
and the notions of value and the notions of
Mhm.
what's undervalued, what's overvalued. I think it's hard to look at anybody and say, oh, well, they've got a mechanism to determine value, because it's just there's so many new forces, and and so, yeah, I think if you're in the space, you probably look at what happens Sunday, Monday, Tuesday, Wednesday, and you say, this has happened before, and it's potentially like a really good opportunity.
Mhm.
If I'm highly convicted, I should like what I own even more. On the other hand, if you're relatively new, or we're thinking of getting in this week, you might still be sitting on your hands. So,
Yeah, I mean, it certainly scares people with, not to, this is not advice here, but these are the moments that you put
well,
capital in
right,
them,
right.
no matter what the investment is. So, but it's human
Yeah, like I
psychology
said.
is rough. So,
Well, I
um,
would one last thing, the behavioral side of this and the psychological side of it is important, to your point. And I think that's one of the reasons why, having that sort of objective third party, like in the case of, just go back to that Morgan Stanley bullet point, like I would really think a lot of those folks are using this week as an opportunity to have that conversation with clients.
yep.
Yeah.
Yeah, or educate themselves so they can have that conversation.
Yeah, that's right.
Yeah,
Now that they've got the green light.
that they've got the
Um,
green light. Yep.
yeah.
Awesome. So talking about a bit of green lights. So FINRA is our next point
Yeah.
here. Work on crypto. You sent this to me. This is pretty fascinating. Maybe I'll let you kind of give your synopsis because I think you spent.
Yeah, I mean, we've beat the SEC compliance regulation drum, wanting clarity. In this case, I thought FINRA, there was a little bit of a bright spot here in this report. So FINRA is the regulator of broker dealers, and they sort of are I don't want to call them a sister organization to the SEC, but the SEC regulates investment advisors. FINRA regulates broker dealers. They're a very, very big regulator in the retail investor
Mhm.
industry. They also do a lot of regulation of trading and exchanges, anything related to securities they're going to have their hands in. And so they came out with a report, and there's an interesting podcast that they record, where they interviewed a couple of executives, I think one from the examination team and somebody else, and they just talked about the crypto asset working group, what they've found, what they've learned. And one data point that I thought was interesting that I wanted to share was that in November of 22, and now we're in sort of August of 24. So, not quite 2 years, but things move quite slow at these big regulators. But they went out effectively a year and a half ago. They looked at a ton of firms, a bunch of firms that were regulated by FINRA. And there were only 22 at that time that were effectively approved by FINRA to provide securities, placement work for private funds, alternative trading systems, electronic trading systems. There was only 22 firms in the entire FINRA regulated universe that were approved. And you fast forward to July, here we are, and on their podcast, they announced that number has almost doubled. They now have 37 FINRA member firms that are approved to do effectively something in crypto securities, crypto trading, crypto clearing. So it's a data point. It's a sign that that there are more market participants. There's a lot more that we could break down in the report, in the podcast, but I took that as a positive. And they do publish quite a bit and talk about it on this podcast. You wish it was more real time, but the reality is what FINRA does is they put out a lot of surveys. They ask members to respond. Members don't necessarily have to. Sometimes they're compelled to because of exams. So it's a back and forth. It's an ongoing relationship, but they really are trying to learn what's going on in this market from the FINRA members. And so, yeah, it's like regulation. It moves slow, but there is movement, in that positive direction in terms of activity.
And the part that, there was a lot there that you talked about, but like the part that makes me the most excited is they're actually talking about it. And they're actually thinking about it, right? You don't necessarily, to your point, they don't necessarily come out and make huge announcements about this kind of stuff. It's, you have to kind of go searching for it in some sense. And to know that at least they appear to be, in my opinion, being responsible, and they're trying to learn about this, so they're not blindsided, is pretty positive.
Yeah. Well, I think it's, I think that all these different agencies have different mandates. FINRA, a big focus of FINRA is to protect, the interest of retail individual investors. So they are certainly paying a lot of attention to the developments in the, the ETF and the index market, as you would expect. And as more and more folks allocate to crypto and different offerings, maybe they'll be the regulator that steps forward. Maybe it'll be the CFTC. Who knows? Maybe it'll be the SEC at the end of the day. But it is an opportunity for somebody at FINRA from a career standpoint to really step forward and try to be at the forefront.
For sure.
Yeah.
So the flip side to all this is these agencies get the rules that they're supposed to make from Congress. And this kind of goes into our next point here about the Fair Shake PAC, or Super PAC, has announced they're supporting 18 different candidates. There's 9 Democrats and 9 Republicans, kind of a smattering of states in here. I see 4 Republicans for California, and New York's got 2 Democrats there. But at the end of the day, having representatives in Congress that understand or just generally not against it can go a long way. And this super PAC appears to be making inroads. Some of these primaries that happened in different states at different times have been positive. So they're allocating across these 18 million, they're gonna be running TV ads and spending $25 million. I don't know over what period of time they'll be doing that, but this covers 52 million Americans, and it'll be interesting because there's a name that's not on this list that I was surprised. John Deaton, he's running against Elizabeth Warren in Massachusetts, who admittedly there's probably not one single bigger person in Congress that is more anti-crypto than Elizabeth. So I'm surprised that he's not on this list. I'm sure they've got their reasons, but it's cool to see them spending the money. You've heard about them raise money. We've talked about that. They've raised over $200 million last time that I have seen a number. So 25 million is a lot of money, but it's, an eighth of what they got, and will be cool to kind of see. I actually look forward to seeing some of these ads to see what they have to say about them.
Yeah, I was going to say we're going to start seeing a lot more after the summer holidays, right? I mean,
Yes.
once people on the East Coast and West Coast go back to school and people get into their rhythms and
Yeah.
football season starts here, it's all going to grind, and then the race is on now, right? I mean,
yeah.
Kamala Harris picked her running mate,
Right.
so maybe we'll get some debates as we go into fall, and there certainly seems to be more chatter from both parties around who's going to be the most pro crypto. So it's gonna be fun.
Yeah, I hope we have a debate. Not
Yeah.
just but
real
I actually hope it's an old school debate, not a
Right.
let's throw in words at each other the whole time.
Right.
So fingers
Yeah.
crossed there. Unlikely, but fingers crossed. So cool. Well, I appreciate everyone for joining us. Thanks for excuse me. Thanks for joining us on this episode of the Weekly Crypto Check-In. If you want to stay updated on future episodes, you can find us on any podcast player by searching Tea Time Crypto Capital or the Weekly Crypto Check-In. Take care.
Thank you.